Hello everyone, and welcome back to another Stock Unlock video. In today's video, we are going to be covering book value in depth and really diving into what book value means and how you can use it to become a better investor. Stock Unlock's mission and our number one goal is to make you a better investor, and this video is part of how we are trying to achieve that at least. So let's just dive right into what book value actually is. And to get to book value, what you need to do is head over to a company's financial statement right here, which you can get to by clicking on the financials tab here on Stock Unlock. And then what you want to do is head over to the company's balance sheet. The balance sheet is where you are going to find the book value, which is also known as the shareholder equity. Now, there is a lot of numbers right here on a company's balance sheet. We're taking a look at Google's balance sheet right now, and this can be quite overwhelming, right? So what I'm going to do is I'm just going to collapse all of these rows, and this is really going to help us simplify what book value actually is. Right here at the bottom, we can see the shareholder equity. Now, the shareholder equity is also known once again as the book value. So if you ever see shareholder equity in the investing world, basically, again, that is book value. It's also known as book value. What the book value is it's simply the company's total amount of assets minus its total amount of liabilities. It's also known as the company's net asset value. And what that essentially means is it's the amount of asset value that the company has after you subtract all of its liabilities or its debts. Let me show you right here. So again, we're taking a look at Google, and in the first quarter of 2022, we can see that Google reported about $357 billion in assets. Now, if we subtract the liabilities of $103 billion, 92 million, that is just an insane amount that Google has, we get $254 billion, $4 million, which is exactly what we're seeing right here for the shareholder equity or book value of Google. That is literally how this calculation is done. Just take the total assets minus the total liabilities, and you will find the company's book value or net asset value. Now, why this number is so important and why investors pay attention to it is because if the company has a positive book value, then it simply means that the company has more assets than liabilities, which is typically seen as a good thing. Now, also, why it is important is because investors like to see the company's book value, again, the net asset value, increasing over time. Because if the net asset value is increasing, then it means that the company is growing its asset value essentially for shareholders. And it ultimately means that shareholders of the business are getting richer and richer and growing their own asset value. Because remember, when you are a shareholder of a business, you actually own a small chunk of that business. You are a part owner of it. So what we do here on Stock Unlock is we allow you to click the shareholder equity of any business, and you can zoom out and scroll around and see the book value shareholder equity of that company over time so that you can see the trend of that company's book value. So right here for Google, this is why I'm using Google because I think it's just a fantastic example. But this business has been consistently growing its book value quarter after quarter after quarter for like 20 years now, basically 2 decades. So Google is a business where it's continually growing its book value or its net asset value for shareholders. And what this ultimately means is that the shareholders of Google are growing their asset value along with the company. So now let's head over to an example of a business where the book value is actually declining. And one business that I know off the top of my head is Beyond Meat. A lot of people know this company because it's like the company that makes fake meat. But check this out, because if we go and we take a look at Beyond Meat's shareholder equity, we can see that in the second quarter of 2020, it topped out at about $390 million. And then ever since then, quarter after quarter after quarter, Beyond Meat's book value has been declining. Now, what this can suggest when a book value is declining is that the business is actually losing money. Because think about it, it means that as time progresses, the net asset value of that business is declining, which also means that the shareholders of that business are essentially losing net asset value as well. Whenever you see a company's book value declining, it could signal that this business is actually losing money and may not be profitable. That is another reason why investors really like to pay attention to the book value. And again, if the book value is actually negative, then it simply means that the company has more liabilities than assets, and that company may not be in a very strong financial position. Now, here on Stock Unlock, if you head over to our Insights tab, We actually grade the company's profitability to let you know how profitable that business is, but we also grade the company's growth, and we score this out of 5. So we're taking a look at Beyond Meat right here, and we can see that its growth score is 1.6. And in the growth score, we can see that Beyond Meat's book value is decreasing, and it decreased by about 85% over the past year. Sorry, actually about 84%. I was rounding up, but this clearly and easily and quickly tells us that Beyond Meat's book value is declining. If we take a look once again at our profitability, we can see that Beyond Meat is an unprofitable business, and it's also free cash flow negative. So Beyond Meat's book value declining is most likely from this business being unprofitable and actually losing money. Now, if we head over to Google's Insights, and we take a look at the profitability score right here, we can see that this is a very profitable business. And if we also scroll down to the growth, we can see that the book value did increase by about 10.43% over the past year, which Stock Unlock lets you know is a good thing. That is what our Insights tab is about. It's just a very quick way to show you some of the highlights and the key things that investors pay attention to when they are looking at the fundamentals of a business. This is one way that we get our investors here on Stock Unlock and our members focused on the company's fundamentals by doing a quick scan of the insights. That is basically what the book value of a business is, and that is how investors use it to make more informed and fundamentally sound investment decisions. So if you guys enjoyed this video, then please remember to leave a like on it. It really helps out our channel. We're trying to grow it. And if you guys are interested in joining Stock Unlock and getting access to this platform, then there will be a link in the description where you can get a free 7-day trial, and you will get access to the entire platform. You will be able to come and click the insights on all of your own stocks, and also make sure to turn on education mode, because whenever you do, you will see these little question marks pop up all over the screen, and every single question mark is free education for you that explains the metrics that you're taking a look at, how to use them, and why investors care about them. So this is a very helpful educational platform that helps you become a better long-term fundamental investor, which is our #1 goal here at Stock Unlock. So thank you all again so much for watching this video. I truly hope you guys appreciated it and enjoyed it, and I really hope to see you all again in our next one.